Good afternoon and welcome to BizTech's Asian Midday Market Watch. Today is the 2nd of March, and with us we have Tina Teng, Markets Analyst at CMC Markets, as our guest today, coming out of Auckland, New Zealand. Tina, welcome to the show.
Hi, Brian.
Now, Tina,
Nice to
before
see
we
you.
get your insights, we're going to take a look at the numbers across the region, but we start with cryptocurrencies. Bitcoin is at 23,522. It's down 1.15%. Ethereum is at 1,650. It's down 0.54%. Now, looking across the regional stock markets, we start with the SGX, which is down 0.56%. We have Bursa Malaysia, which is up 0.14%. Shanghai is up 0.18%. The ASX All Ordinaries is pretty flat. It's at 0.06% up. The Nikkei is flat. The Hang Seng is down 0.54%. And rounding up the numbers, we've got the Kospi, which is up 0.99%. Now, what is your view, Tina, on market performance in the first half of the day?
Asian markets are now in the red. I think it's pretty much follow the Wall Street movement overnight. As US bond yield jumped again, like the 10-year US bond yield jumped above 4%, which was a significant surge. This pressed on stock prices. Wall Street closed finished mixed. However, I think all the equities were under pressure overnight. I think that's why Asian markets are now under pressure as well.
Now, Tina, also then we've got a strong response to China's PMI numbers yesterday. So the PMI numbers were the best, I think, since 2012. What's your take on it at CMC Markets?
So the China's PMI data was a very positive, strong data across globe. I think a China's rebound would be key for the financial markets this year. So yesterday we can see after the data released, equity markets as well as Asia FX currencies were pretty strong. That's left sentiment in the commodity markets as well. We can see oil, copper, including gold, has gone up. I think there's just that's really reflects the positivity towards China's reopening.
Now, I want to zoom in on your part of the world, Tina, Australia, New Zealand, because we've had earlier this week Australian GDP and CPI data out. And that's now leading to investors expecting further rate hikes. Walk us through that and also the state of the New Zealand dollar and its expectations.
So Australia data was major for the country yesterday. And the CPI data in January actually declined sharply from December. Before, like quarter four in the fourth quarter, the CPI data was 7.8%, but in January it declined to 7.4%. It's a big decline. After data released, Australian dollar put back. However, after the Chinese data came out, just sharply rebounded as well. I think the CPI data from Australia was positive for the country as people see the CPI deflation has peaked in January. Same time, the GDP came out lower than the expectation. I think this data implies that aggressive rate hikes in Australia actually are hurting the economy, but at the same time, they finally see signs of peaking inflation. So the Australian dollar just adjusts according to this economic data. But actually, I think this upside momentum is still strong just because of China's rebounding.
Now, Tina, as always, thank you very much for your insights. Thanks for coming on the show.
Thank you, Brian.
Now, we've been speaking to Tina Teng, markets analyst at CMC Markets, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. This interview will be on our website, www.biztech.asia, as well as our social media platforms. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.